Salesforce reported quarterly financial results that sent the stock price lower. Of course, I'm disappointed in that because I've had Salesforce stock rated as a buy all year long in 2025. But unlike other YouTubers who sweep these disappointments under the rug, I continue to offer coverage and follow up on investments that I have rated as a buy. So in this video, that's precisely what I'll do. I'll evaluate Salesforce most recent quarterly financial results, and I'll update my recommendation for Salesforce stock. I'll let you know if I still think it's a buy or if it's time to cut your ties with this investment. I'll share with you my proprietary discounted cash flow valuation calculation for Salesforce that shares my fair value calculation for this business. I'll also look at valuation on a forward price to earnings basis, and I'll do all that in this relatively short video. So let's get right into it after a brief message from my sponsor. Right, so Salesforce reported second quarter revenue of $10.2 billion, which is up 10% year over year. Current remaining performance obligations of $29.4 billion was up 11% year over year. Remember, remaining performance obligations are contracts that the company has signed and have yet to turn into revenue. When a company like Salesforce signs a contract with another company to serve something over a course of a year, then it recognizes that as revenue throughout the course of the year, not when it signs the contract. So at first, the contract signing goes into remaining performance obligations, and then it turns into revenue as the company performs those obligations. What I like to see from companies that I'm following is remaining performance obligations increasing at a rate that's faster than revenue. Now, of course, that's not always common to see, but it's something that I like to see. Something like seeing revenue growth accelerating, which means revenue growth is increasing at an increasing rate. The company's operating profit margin reached 22.8%, which is a solid operating profit margin, and the company spent $2.2 billion buying back shares. I usually like to see companies buying back shares, especially companies like Salesforce, which have a reputation for being, I want to say, a little bit wasteful, making acquisitions, overpaying for acquisitions. So when a company like this buys back shares, investors get a sense of relief like, okay, they're not just going out and wastefully spending that money, they're returning it to shareholders. Click the link below to watch the full video.